Hi there, welcome to Kneppy Invest. I have another financial year 23 result video here. A few more to go, maybe 15 or so before I get through these. And within the next few weeks, I'll be able to add some half year, or for some companies, maybe even their full year results that they will release in February. Now, on to Maggie Beer. Probably don't have to tell you what this company does, but I will in the next slide. Now, this company has a long history on the ASX. It listed in August 2004 as Jumbuck Entertainment Limited. No idea what the company did back then, but in 2014, the company changed its name to Primary Opinion Limited, and whatever Primary Opinion Limited did was not working. So management started in about 2015 or 16 to expand its operations to include investment in sectors beyond the technology sector. So obviously, Primary Opinion was in the technology sector, and they transitioned to the food and beverage industry with a particular focus on premium products. So you can see where we're heading to right now. The first investment the company made in July 2016 was an acquisition of a 48% stake in Maggie Beer products. So hence the name Maggie Beer. But the company did not change its name to Maggie Beer initially. So after a few other acquisitions, the company changed its name to Long Table. And that's when I actually discovered this company back, would have been about 6 or 7 years ago. It acquired the other 52% of Maggie Beer, the company, not the person. So this is not a Truman Burbank universe. And then in July 2020, Long Table changed its name to Maggie Beer Holdings. So this company has three major brands right now, including Maggie Beer. So let's talk about those major brands this company has on its books. The first major brand is Maggie Beer. So they have stuff and sell stuff like free-range chicken stock, truffle triple cream brie cheese or brie cheese, and ice cream. Now, the only thing I probably have ever tried when it comes to Maggie Beer is the ice cream, burnt fig, honeycomb, and caramel ice cream. In fact, I went to Woolworths today. I'm recording this video on the 29th of January. And one of the things I actually did have a look to see was to see if Woolworths was stocking any Maggie Beer ice cream, and they were. And in fact, a few flavors did pique my interest. Not burnt fig, honeycomb, and caramel ice cream, although honeycomb and caramel I do like, but the burnt fig, not sure about that. But a few of their flavors did almost entice me until I looked at the price. It was about $12 for 500 milliliters. So I'll just wait until Maggie Beer ice cream is half price before I try a few of their other flavors. I think they had about 4 flavors on a stock, but I do notice, because I do buy ice cream quite regularly, that Woolworths and Coles tend to bring in new brands, and sometimes those brands don't work, and then you never see them again. But Maggie Beer ice cream, I first bought that maybe 6 or 7 years ago, and then it just disappeared. And no idea where it went, but now it is back. One of the reasons the company changed its name to Long Table was because of an acquisition of Paris Creek Farms organic dairy. So for those who love organic dairy, maybe these are products for you. And to be honest with you, I have never seen any of these products. Doesn't mean you can't buy them in Woolworths, Coles, Aldi, or like that, but I've never really taken a big hard look. So not ice cream. See, ice cream's on my mind. Milk. Now, funny enough, biodynamic cream on top milk. No idea what biodynamic means. And that seems to be a bit of a buzzword when it comes to Paris Creek Farms, because not only do you have biodynamic milk, you have biodynamic yogurt and biodynamic fresh butter unsalted. What is biodynamic? I should do a little bit of research on that, but I'll do that after I record this video. And the final brand this company has, and I do remember this acquisition, not that I follow this company too closely, but I do remember Long Table or Maggie Beer making this purchase of hampers and gifts. And I was just wondering why hampers and this sort of thing popular, because I'm not the sort of person who would really go in for hampers. But anyway, they made a purchase of Hamper and Gifts Australia quite a few years ago. So if you know anything about hampers, or if you love hampers, maybe you know more about HGA. Now let's have a look at the company's financial year 23 results, just to see if there's anything to like here. And to be honest with you, this is not the sort of company that I am drawn to. Not the only way I could be drawn to this company is if one of their brands becomes really well known and really popular among the populace. Say, for instance, Maggie Beer ice cream, and people just think, well, this is gourmet ice cream. You can't beat it. And because of that brand, they're able to keep on selling at $12 per 500 milliliters. Maybe they can increase the price to $20 just because of the brand. That's when you might get excited about a company like this. So they need to develop some sort of brand recognition, that sort of thing. Not sure Maggie Beer has that right now. Anyway, let's have a look at some of the numbers. Revenue, 88.7 million, down a little bit from last year, 1.4%. Their profit up about about 2.4 million, because it was negative 1.6 million last year. Well, maybe that's the increase. But they are profitable, $800,000 of profit in financial year 23. So you might be laughing at that, but you can tell straight away. Now, I should say that the profit can be quite volatile on a year-to-year basis. But just in financial year 23, you can just see the low profit margins. $800,000 of profit on revenue of 88.7 million. However, gross margins are nice at 50.3%. And one way you could determine if this company is gaining any sort of competitive advantage, or maybe their brands are becoming more recognized, is if you see those gross margins starting to rise. That means the company has pricing power and they're lifting the prices of their products, but they keep selling their products. That would be a good sign for the company. So gross margins, nice. So a lot of, I suppose, maybe not the problems in this company, but the net margins, profit margins are quite low. So one thing to look at in regards to this company is just look at those margins, and also the gross margins as well. Operating cash flow and free cash flow positive, $6.5 million in operating cash flow, $5.3 million in free cash flow. The main reason there's a difference between the cash flow of this company and the profit is because of depreciation and amortization, which is quite true for most companies. I had a look at the reconciliation in the notes, and that was the main reason. No significant changes in working capital. So it's all about depreciation and amortization for this company. They also have net cash of $9.2 million. Now, this company does not include their leases in their debt. I don't do that either. So if you actually do have a look at their presentation or any sort of their commentary, they do mention they have net cash of $9.2 million, which means this company is or has an enterprise value that is lower than the markup. So let's have a look at the markup right now at the end of closing or trading on the 29th of January 2024. The company has 352.4 million shares on issue and a share price of 9.5 cents. The company has a markup of $34 million, which means the enterprise value is about $25 million. Equity of 85.7 million. So you can see a bit of a discrepancy between the valuation of this company, 34 million, or even the enterprise value, 25 million, to the equity. So this company is trading significantly below book value. But one of the reasons why equity is 85.7 million is because of some intangibles, goodwill, because of these acquisitions. And sometimes you will see when a company makes an acquisition, the acquisition doesn't go well. Eventually, the company will have a one-off loss. They have to write down that acquisition or that goodwill, and that's when the equity can take a massive plunge. So that's a possibility with this company in the future. It's not definite, but a possibility. And We'll have a look at the performance of the three brands. And I was a little bit surprised which one of those brands is the best performing brand for this company. Return on equity and return on invested capital, simply because profit was fairly low this year. You probably can disregard that right now. But if this company continually has low return on equities moving forward, that would be a concern. But of course, they have to remain profitable to have a return on equity. And the dividend yield, 5.3%. So they did release or give their shareholders a dividend last March. So I wonder if they're going to give their shareholders another dividend in financial year or calendar year 2024. That remains to be seen. And here we have sort of a disaggregation of the company's revenue and EBITDA by the different brands. So Hampers and Gifts Australia, or HGA, Maggie Beer Products, and Paris Creek Farms. And the biggest brand is the hampers, $41.8 million of sales. Maggie Beer products coming in second place at $31.6 million. And Paris Creek Farms coming in last place with $16.4 million. Not only that, Paris Creek Farms is not profitable, EBITDA negative. And if you have a look at Hampers and Gifts Australia, EBITDA of $6.2 million in the last financial year, significantly higher than Maggie Beer products. So what this company could do in the future is sell off Maggie Beer products and Paris Creek Farms because they're underperforming compared to HGA. And of course, if they do that, they'll probably have to change the name to HGA or just Hampers and Gifts because, yeah, again, I was a bit dubious when I saw this acquisition a few years ago, but just looking at these numbers, maybe it shouldn't be so dubious. In fact, it's the star performer of Maggie Beer. So maybe actually they should change the name to Hampers and Gifts Australia or HGA. So $6.2 million of EBITDA, that business profit before income tax benefit, $3.3 million. Maggie Beer products only $791,000. Paris Creek Farms negative tax before profit of $2.2 million. So I'm a little bit surprised that Hampers is so popular in Australia. Now let's have a look at some valuation metrics. Some of these maybe we can disregard. Now, the other thing to notice when we look at the valuation metrics is you get different ideas of the valuation of the company depending on what you're looking at. So if you compare PE ratio to price to book ratio to EV to operating cash flow, you might say just if you focus on PE ratio, that this company is way overvalued. But if you look at the EV to operating cash flow, or even just the price to book ratio, you might think this company is way undervalued. So I like to look at all valuation metrics, take them all together and decide whether a company might be undervalued or overvalued, because if you just focus on one, you can get a distorted picture of a company. So PE ratio 42.5. I've already mentioned that this company is trading well under price to book or trading well under the book value of the company. So price book ratio at 0.4. That does seem fairly low. But again, a lot of the company's equity is goodwill because of those acquisitions. EV to operating cash flow, 3.9. That does seem low. So the number I typically look at in terms of understanding whether a company might be overvalued or undervalued, and this is just a general rule, you need to change this rule on a case-by-case basis. So a rapidly growing company should have an EV to operating cash flow much bigger than, say, a company that's not growing at all. But typically, I'm looking for a number between 6 and 10. If you see a number below 6, I'd like to study that company a little bit more. And the EV to operating cash flow for Maggie Beer is only 3.9. So there is definitely an argument that there is or could be some value with this company. And the free cash flow yield is 15.6%. One of the reasons why I tend to focus a little bit more on free cash flow yield is just the research I have done that suggests free cash flow yield is a good indication on whether a company is going to beat the market or not. So those companies with a high free cash flow yield have a better chance to beat the market. So another way to look at it is those companies might be more likely to be undervalued than overvalued. Also did a reverse DCF just to see what the growth in, I think it was operating cash flow, no, it was free cash flow I used here. What's the growth in free cash flow have to be to justify the current valuation? It's only a low 2.5%. And you have to say, if Maggie Beer products, or what this company is called, Maggie Beer Holdings, can achieve a growth in the free cash flow of 2.5% over the next 5 to 10 years, that would be concern. So another probably sound argument that this company could be considered undervalued. One thing I like to look at all companies, except if a company hasn't been around for very long, is just the revenue, growth, gross margins, any sort of financial history of a company, particularly paying attention to revenue, profit, margins, that sort of thing. So Maggie Beer's revenue history from 2018, also the gross margins history is shown here, but what I like to see is revenue growing through time. But during this period of time, the company has transitioned to Maggie Beer products, changed their name, and because of those acquisitions, you should expect to see the revenue growing. If this was all organic growth, this would blow me out of the water apart from the last year. So revenue has grown from 8.7 million to almost 90 million. Revenue down a little bit from last year, but that's okay. Margins have also been increasing, and I'm wondering, this is just my thoughts right now, I'm wondering one of the reasons why margins have been increasing is because of HGA to hampers. Possibly that is a higher margin business just based off the numbers we saw. So EBITDA positive, and in fact, the EBITDA is significantly greater than Maggie Beer products, even though the revenue is not all that greater. So I'm thinking there is good margins in hampers. Who would have thought that? The company does have some goals for financial year 24. 3 goals. First goal is to optimize and unify assets, create a unified supply chain team across MBP, which must be Maggie Beer products, and PCF, which is Paris Creek Farms, in-house Maggie Beer Ashbury pre-capex. And the second one is to expand the Maggie Beer brand. So now we get to the point where I'm starting to see Maggie Beer ice cream in the major chains, supermarket chains like Woolworths. So again, this is the burnt fig, honeycomb, and caramel ice cream. In fact, I did not see that flavour in Woolworths. The other flavours I did see were actually much better. So this particular slide was actually in their financial year 23 presentation. So they do mention here Maggie Beer ice cream range will be available at a major supermarket. Actually, they say available at major supermarket in October. So there's a little bit of bad grammar there. So they've definitely achieved that because it is now in Woolworths. I'll go to Coles in the next few days just to see if Maggie Beer ice cream is in Coles, and maybe I'll go to Aldi too, but much less likely to be in Aldi. Scale e-commerce platform. That is one thing I didn't take a particular attention to, is the disaggregation of the revenue to the online or e-commerce and the physical stores, or whatever you call it, not physical stores, but what they sell in Woolworths, that sort of thing. And that's going to be quite important for all companies moving forward, because I think over time, more and more people will be shopping online. We have seen people transition already to that. I'm doing that myself. So scale the e-commerce platform is probably a good goal to have in financial year 24. So at this point, Maggie Beer Holdings is looking interesting. So maybe undervalued. Definitely could hear that argument. So the next thing I want to look at is whether the company is drawing any interest from the market. And it's not. So this company is at this point in time, right now, absolutely unloved by the market. Now, value investors might say, well, that's okay because I see value in this company at a share price of 9.5 cents. But that doesn't mean the share price can't fall even further from here. Share price could halve over the next few years or even the next year or so, because the share price is in a well-defined downtrend. In fact, the share price has fallen from 62 cents. So this goes back 2 years to February 2022. So the share price has fallen from the 60 cents range down to 9.5 cents. So we're talking about an 80% drop in share price over a 2-year period. So just because it's happened over the last 2 years doesn't mean it can't happen again over the next 2 years. So what I'd be waiting for here, even if I thought the company was undervalued, is just a sign that the sentiment in this company was changing, shifting from negative, maybe even highly negative, to positive, and I want to see a shift or change in the trend in the share price. Now, on the positive side, even though the share price has been a well-defined downtrend, we are possibly, I'm just saying possibly at this point in time, possibly seeing a bit of a shift in sentiment. And that's been happening since the end of 2023 when the share price was under 8 cents. It goes low as about 7 cents or so. So we did see a little bit of rally in the share price, but the rally was or did not coincide with volume. I want to see high volume. So the best way, by far the best way the company, or maybe not, but the best way the company can change the sentiment in this company, change the trend in the share price, is a really good financial report. If they did that, sentiment in this company would change instantly. The next 5 companies I tend to feature in this particular series include The Reject Shop, ResMed, who just released their quarterly results. The market liked it. Calix released something today. I had a look at the announcement title and it went right over my head, but the market hated it. Share price last time I looked was down about 20% for Calix. I haven't done much research in that company. The only thing I know about Calix is interesting tech, and the valuation of the company has been ridiculously high. That's just my opinion without even understanding their tech, so I could be completely wrong. Sonic Healthcare, and then Ready Tech. So that's all I have for this look at Maggie Beer's financial year 23 results. I hope you found something interesting in this video. Hope you've learned something new. Just by preparing this video, I learned a little bit more about Maggie Beer products, particularly my underestimation of hampers. Australia loves hampers. Maybe the whole world loves hampers. Seems like a really solid business. that HGA, hampers and gifts, and pretty good margins as well, I assume. So that purchase Maggie Beer made a few years ago, maybe 5 years or so ago, seems to be a very astute acquisition. Paris Creek Farms may be less of an astute acquisition, and I have a feeling they made the acquisition when dairy and milk was running hot. That whole sector was running hot about 5 or so years ago. So if you have any thoughts about Maggie Beer, I'll just leave those thoughts in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.